Hi everyone, I am Jay Shah, and in today's video we are going to discuss about corporate actions. So right now I have opened the share of Infosys, and this is the site which I have recommended to you, or I have told you about it many times before as well. So this is moneycontrol.com, and this is the section which we are going to discuss today, that is corporate actions. So you can see over here dividends, bonus, splits, rights, all of this we are going to discuss about it in today. So actually I have decided to make this series of 5 videos instead of just one very long video, right? So that would be better, I guess. So we are going to discuss about 5 corporate actions: dividends, bonus, splits, rights, and buybacks. So let's start about each of them, but before that I want to ask you a question. So let's say that you have bought some number of shares of a company. So now you being the owner of those shares, or being the shareholder of those companies, like I explained to you in my first video as well, whenever you buy a share of a company, you are like you're a shareholder in the company, and you are like a percentage owner in the company. Like however small it may be, that doesn't matter, but you are owner of the company, right? So now you being the owner of those shares, how can you earn profit or returns on the amount you have invested in? What is the way in which you can earn? So now most of you will answer that the only way through which we can earn is that, let's say I have bought a share at 100 rupees. When it reaches 110, 120, I will sell it. So the difference will be my profit. That's one way to make returns on your investment or make profits on your investment. But there's a second way whenever you invest in any company's shares, and that way is dividend. Okay. So now instead of you looking at shares as a example of like NSE, BSE, all of this, I want you to take a look at shares as like the same thing. Like I told you, the owner of a company or a business. So let's take the example of a business. So let's say that we are 5 people and we are running a business since the past, let's say 2 to 3 years. Okay. And we 5 people have equal equity in the company. Let's say each one of us has 20% equity in the company. And let's say that this financial year, we made a profit of 50 lakh rupees, like net profit of 50 lakh rupees, like after like cutting all the expenses, taxes, interest and all that, we made a net profit of 50 lakh rupees. Now, that company in itself is a living entity. Okay. Now we 5 owners of the business, we have 20% equity. Why did we even start the business whenever we did? We wanted to make profit for ourselves. So now what we can decide, so now this 50 lakh rupees of net income, what can we do with it? So we can decide that, okay, we are 5 people. Let's do one thing. Let's withdraw the 50 lakh rupees from the company's account to our personal account. And we are 5 people, so we'll get 10 lakh rupees each. But you cannot withdraw all the amount, right? You are running a business, so you need to keep some capital aside for for expanding the business, for running the operations, and all of these things, right? Whenever you're running a business. So then you decide that, okay, let's not take out or withdraw all the 50 lakh rupees. Let's withdraw 20 lakh rupees. Okay. So we'll keep 30 lakh aside for running the business, and if you want to expand the business further and all of that, and 20 lakh rupees, let's withdraw. Okay. So now 20 lakh rupees, and we are 5 people, so 4 lakh rupees each. Now those 20 lakh rupees, it came out from the company's account to our personal account. Okay. So company, like I told you, is a living entity in itself. So whenever you want to distribute or you want to withdraw the profits, being an owner of the company, that way is known as dividends, right? So this 20 lakh rupees which I told you, which we'll withdraw from the company, and because we are the owners of the business, we'll take out it from the company's account to our personal account. So this is done through dividends. So that withdrawing thing, so corporate action is like anything. It is the name itself suggests you, right? Corporate means it's a business, it's a company, and action, it's like any action that can affect the shareholding, or like there are even board meetings and all of that also comes under the corporate actions. Anyways, so yeah, we were talking about dividends. So dividend is a way of withdrawing profit. Okay. Now here, first of all, you can see type of dividend as final and interim. Okay. So now you know that 31st March is the date before which you have to file all the tax returns and all of that. I'm not getting into that right now, but you know that 31st March is an important date, right? Now what happens is, this particular date, you can see 26th October 2021. This is the share of Infosys So you can see the dates and you can see the dividend amount. Okay, I'll come to this, but for now just focus on this type. Okay. So on 26th October, the financial year is still going on. Okay, so we do not know that in this year, financial year which we are running, what is going to be our net income, right? So, but still the company is declaring a dividend, right? Because see, like I gave the example to you that 50 lakh rupees is the net income which we have made. Out of that, we are withdrawing only 20 lakh rupees right now, and 30 lakh rupees we are keeping as a cash reserve for running the business in the future and expanding and all of that stuff for running the business operations, right? So from the previous year as well, you must have kept some cash reserves aside, right? This is known as this cash reserves which you keep aside, and so this is known as retained earnings, right? So the name itself suggests earnings means the net income or the net profit which you have made, and retained means you retain it within the company. You have not withdrawn it into your personal account or your personal pockets, right? So now what is the meaning of difference between interim dividend and final dividend? So here you can see the date is 31st May. Okay. So by 31st May, we know that how much profit we have made in the previous financial year, right? So now, like we know in this case that the profit is 50 lakh rupees. So we decide that, okay, now we know that the profit is 50 lakh rupees. Out of that, let's withdraw 20 lakh rupees like we took the example. But when it is 26th October, the financial year is still not yet completed. So we do not know whether we are going to make a profit of 50 lakh or 40 lakh or 60 lakh, whatever. So we do not know. But we are still declaring a dividend from the previous years, previous financial years, whatever we would have earned profit, right? From the retained earnings, right? So that kind of dividend is known as interim dividend, right? So the financial year is not yet completed. You do not know how much net income you are going to make. And for some companies, you even do not know that whether you're going to make a profit or a loss. Okay, only for some companies. But the point is that the net income, the calculation of for the net income, you do not know what would be the exact net income for this financial year. But still you are declaring a dividend from the from the retained earnings, right? So that kind of dividend is known as an interim dividend. And whenever, so 31st May, so you would have, by 31st May, you would have known that in the previous financial year how much income you have made. So from that you decide that, okay, whatever is the percentage we want to withdraw, so that kind of dividend would be a final dividend. Okay. Now there are important dates over here like X date, record date. I'll come to that. But here you can see the dividend amount is 16 rupees, 15 rupees, 15 rupees, 12, 9.5, right? So first of all, some important things. It's not compulsory for a company to withdraw profit this year. Okay, so let's say that we have made 50 lakh rupees and we decide that this year we are not going to withdraw any profit and we'll retain this whole 50 lakh rupees because we want to expand the business. That's also possible, right? So see, whenever a company wants to raise money for its business, so there are two ways. One is through debt or one is through equity. So whenever you raise a debt or a loan, you withdraw some amount, but now it is compulsory that every year you have to pay some amount as interest, right? So the people who give you debt or loan, what do they expect is they expect a constant or a fixed rate of return that is going to be according to the interest rate, like the interest rate of the loan or the debt which you have taken, right? But the equity shareholders, they have invested to become a part owner of the company, right? So even if you do not declare a dividend, so whenever someone invests as equity shareholder in your company, they can earn through two ways, like I told you. One is the price of the share is going to increase, so they will sell their stake at a higher price some years later or months later or whatever. And the second way is through dividend. Now, it's not compulsory to give a dividend. Okay, in case of if you have taken a loan, then it's compulsory to give the interest every year to those person who gave you the loan or the debt. But to equity shareholders, it's not compulsory that I have to give you dividend every year, or even the amount is not fixed. That can be decided, right? So first of all, dividend is not compulsory to give every year, and even the amount is not fixed, right? Compared to interest. Interest is fixed and the amount is also fixed at how much you have to interest you have to give every year, right? Okay. Now let's discuss about the dates. So I hope you have understood that dividend is a way of withdrawing the profits. Now let's talk a little about how these dividends and announcements and all of this impact the share price, and when do we get the dividends. There are some important dates to understand. Okay. So first date is the company will announce that, okay, this year we are declaring a dividend of this much amount on this date. Okay. So first is the announcement date of the dividend. Now there are two important dates after this. One is the ex-dividend date and one is the record date. Okay. So now after dividends, we are going to discuss more corporate actions. Like we are going to discuss 4 more corporate actions. So in that also we'll have similar dates. First will be the date of announcement, when the company announces that okay, this corporate action is going to take place. Next we have the two dates, X date and the record date. So in case of dividend we will call it as a X dividend date. In case of a bonus we'll call it as a X bonus date, and so on, right? And the last date for the dividend is the payment date. Okay, so let's discuss about all the 4 dates. First of all, you know that even whenever you are investing or trading in the stock market or the share market, we have something known as T+2 settlement. I have explained this in complete detail in my video of basics of stock market itself, so you can check it out. So the point basically is that if you buy shares today, it will take 2 days for those shares to reflect in your demat account. Okay. So what is the X dividend date? Okay, so here the X date is 31st May 2022. So X means it has happened, like in the case of relationships. Okay, anyways, bad reference, but anyways. So X, so whenever you talk about X dividend date, means the dividend, that thing has already happened. If so, 31st May is the X dividend date in this case. Okay, so you need to buy the shares before 30th. So the last date for, so see, whenever you wanted, so what is the point which I'm trying to prove here is, see, the company announced that we are going to give a dividend of 16 rupees per share. Okay. Now, many people who were previously not the shareholders or they did not have Infosys, they had not bought Infosys, but now because the company declared that we are going to give a dividend, now they want to buy Infosys because they will become the shareholders of Infosys. So they want this dividend of 16 rupees, right? So why this X date and record date is important, that it's not that if you buy it anytime you can get the dividend. Okay. So this X date is 31st of May. So the last date at which you can buy Infosys if you want this 16 rupees of dividend is 30th May, because the X date is 31st May. So one day before that, right? If you buy on 31st May or after that, you won't be eligible to get this 16 rupees of dividend. Okay. So here the X date is 31st of May. So 31st of May or after that, if you buy the Infosys share, you will not get the dividend. And before 31st May, that is 30th May or before that, if you have bought the Infosys share. So here there is one more date which is known as record date. So 31st May is the X date. So after 31st May, so 1st June, if that was a trading day, I do not know that whether it was a Saturday, Sunday, but let's assume that it was a trading day. So 1st of June will be the record date. Okay, so let's assume you buy the shares on 30th, right? So 30th, 31st and 1st, right? So T+2. So 30th was T and 31st was T+1 and the 1st of June was T+2. So if you buy the shares on 30th of May, by 1st June they will reflect in your demat account because T+2. So the point over here is, how will the company decide to which people to give the dividend? They'll see that on record date, the people who have the Infosys share in the demat account, those people will be eligible to get the dividend. So here the X date is 31st May, the record date is 1st June. So if you want because there is a rule of T+2, if you want the Infosys shares in your demat account by 1st of June, you need to buy it so the maximum you can buy it is at 30th of May. After that, if you buy, you won't get the shares in your demat account by 1st June, so you won't be eligible to get the dividend, right? So the X date is, before the X date, you need to, so we are going to discuss about bonus shares, splits and rights and everything also. So if you want to avail the profit if you want to take benefit of that particular corporate action, so you need to buy the shares one day, the maximum you can do is one day before the X date. So 31st May is over here. So last date is 30th May for you to buy the shares if you want to avail the dividend, right? And so 31st May is the X date and 1st June is the record date. So by 1st June, you should have the you should have the shares in your demat account if you want the dividend. Now the last date which would come here will be the dividend payment date, right? So the date at which the company will actually pay out dividend and you will get the dividend in your bank account, right? So first the company will announce that we are going to give a dividend of this much rupees per share, and this is the X date, this is the record date. So according to that, at least one day before the X date, you need to buy the shares of that company if you want the dividend. If you do late than that, you won't get the dividend. And so X date, record date, and the last one is the dividend payment date, right? Now, how does this dividend announcement affect the share price? So first of all, dividend usually affects the share price in a positive way, okay? Because see, we made 50 lakh rupees. That is the reason we are withdrawing 10 lakh rupees of profit, right? Instead of 50 lakh rupees of profit, what if this was a 10 lakh rupees of loss? What would we withdraw? Nothing, right? So first of all, the company is declaring a dividend means the company is making good profits. So that's a positive symbol. So the share price is affected positively. And the second reason, like I told you, many people who had previously not bought Infosys, but now because they want the dividend, they will buy Infosys. So the demand of the Infosys share might increase and the share price will increase, right? But after the X date, you will see that is on 31st May. So after that, the demand will slowly decrease, because after this, if you buy, so till 30th May, the demand usually you will see that the price of the share is increasing, because more and more people are willing to buy Infosys because they want the dividend. But 31st May or after that, you will see that now if you buy, you won't get the dividend. So now the demand will suddenly decrease a bit. Now it's not the case always, but many times it's seen like this. So in that case, the share price will come a little bit down from there, right? So this is how it affects the share prices. There's no such compulsion, obviously, but generally this is a trend it is seen. So when the dividend is declared, after that, till the 1 day before the X date, generally the price increases, and after that the price sees a little bit of correction, because many people who had just bought it for the sake of dividend will now sell the shares after 1 or 2 days, right? So yeah, that was all about dividends.